Hello, everybody. Welcome to the Loan Officer Wealth Podcast for a very special episode. We are joined by Tim Breeham. Tim, welcome to the show.
Hey, thanks so much for having me, Chris. Pleasure to be with you today.
It is my pleasure as well. As I mentioned in the preamble, I have known of you for a very long time, and for our seasoned loan officers, I think everybody will know who you are. For those that are newer to the industry, a lot of the methods, techniques, things that you're being taught about the fundamentals of how to grow your mortgage business, a lot of that started with Tim. And he has been prolific in the mortgage industry, as you heard on the intro to the show. Now, Tim, I know everybody comes at you right away with, let's talk about market conditions, let's talk about growth. But I was hoping that you could share with us your story of how you ended up in the mortgage industry and growing to the point that you're at, because I know that you have a master's in spiritual philosophy from a university in California. And I'm just wondering how that turned into such an incredible career in the mortgage industry. Could you tell me a little bit about that story?
Yeah, they work a little bit in the inverse. So my master's in spiritual psychology,
Thank you.
and yeah, you're welcome. So I'm going to give you like the 300,000 foot because I don't want to get too caught in the weeds. So we could do a little bit of teaching, but started in the mortgage industry in '92, struggled. I got out of the gates fast because rates were attractive and there were refis. I did a lot of consumer direct marketing, and was able to kind of get the gumption up to quit my day job and to go full time at it. And then '94 hit, and '94 was a lot like today's market. Interest rates were at 9.75. I worked at a mortgage brokerage company in the San Fernando Valley in Southern California. We had just had in January of '94 the Northridge earthquake. 40% of the houses in my marketplace were red tagged, so you couldn't lend on them, and rates
Wow.
were astronomically high. So I had to figure out how to stay alive. I mean, it was absolutely all about how do I get a deal in the door? Figured it out, fought my way through it, then started to really build my book of business in a pretty profound way. By '98, which is my fifth year in the business, was the first year that I did over 300 loans, over 100 million in production, and had my first seven-figure income year. I guess at '98 I was 31 years old, so I was a pretty young guy that made a lot of money. So I was very lucky. Then went through '99 and 2000, which were tough years, but I was much more equipped for that market. Rates were around 8.5, 8.75 at that time. There weren't a lot of refis. I built a base of purchase business, and maybe most importantly, Chris, is I really was good at database management. I mean, I think that was the
Yeah.
first thing that I was kind of known for. Started teaching at some of the Todd Duncan seminars and things like that back in the '90s. Then, '01, '02, '03, '04 was really terrific business. Peaked out in '04, where I did just under 700 loans, 683 loans that year personally for 235 million in production. While I was creating this thing and developing this thing called Loan Toolbox, um, it was clear to me that Loan Toolbox was my path, and that being a teacher and a virtual coach to the industry was where I needed to go. So I actually gave my book of business to my team as my gift to them for all the amazing work they had done with me over the previous 13 years, and went full time into being the CEO of Loan Toolbox, and taught a little under 11,000 mortgage professionals at our peak in that platform. Was fortunate enough to sell that and retire. It had always been my goal to retire by the age of 40, which I did. And I
Wow.
moved with my family to Italy. We lived there for a year. My kids went to school at the international school in
Wow.
Florence. Came back, went through a major life event that wasn't a lot of fun, but was also the big growth opportunity, which was my divorce. Um, about a year after we came back from Italy, and that's when I went to school. I was searching for answers. I was searching
Huh.
for understanding of myself, searching for meaning in my life. And I went back to school full time for 3 years and got my master's degree in spiritual psychology in '09, 10, and 11. In 10 is when I decided to start my coaching practice. And I've been doing that now for 13 years. So this is actually the longest This is tied with the longest profession I've ever had, along with being a mortgage originator. And I'm fortunate to coach some of the best originators in the country. I mean, some of the names that many of you know are my clients and dear friends, and that's what I do to this day. So that gives you a quick update on me.
Got it. And that is the Leadership 360 coaching program.
Correct. Yeah. Performance Experts Coaching is my coaching company, and L360 is our hallmark program that we do every year. We take 12 clients annually only, and there are three of us as coaches, so it's a really nice ratio of coach to client, and it's a 1 year journey that is heavily business based and heavily personal development based. I would say it's about a 50-50 blend of both, and our clients. We love our clients. They're pretty amazing people. So.
That is incredible. So, one thing that really stood out to me is cycles. You've been through, four, maybe five major market cycles and thrived through all of them. Came out stronger on the other side, but was able to thrive through them. So, I'm wondering if you can share with our guests, because we're in the middle of a major market cycle right now. What are you coaching your clients on right now? And how does that relate to how you went through the cycles previously?
Yeah, I'd say that, there are different pillars to being a successful loan originator, and those pillars have seasons.
Hmm.
So, right now we're in the season of the following pillars being the only pillars that matter. And in no particular order, but I'm going to give you them in the order that I developed them back in the loan toolbox days in a model that I called the pyramid of a complete loan officer. So level one is essential knowledge. And what essential knowledge is everything from understanding the financial markets to understanding how to pre-underwrite a file correctly, to understanding loan product and a wide variety of loan products. I'm going to get into in a minute why that is so important, Chris. Level two is your system for selling yourself. And they build upon each other, because here's the reality is that you could have all the greatest scripting in the world, but if you don't believe in you, if you don't have the self-confidence that comes with having the essential knowledge piece, then you're going to have call reluctance, because you're going to be afraid of being asked the tough question. So in today's market, um, there are always opportunities that come your way. Whether you seize them and kick that door of opportunity open and walk through the doorway and discover what's waiting on the other side, which is typically a profound relationship that you would never have been able to obtain had you not had the essential knowledge.
Hmm.
So, I can list off, and for the sake of brevity, I won't, but I could tell you two or three stories of prolific relationships that were truly, I wouldn't say business altering, because that would be underestimating it. They were life
Hmm.
altering relationships that came about from me knowing how to get a tough loan done. And
Hmm.
that's what this market is about right now. I mean, there are few deals. There are still too many loan officers for those few deals. It's the originator that can get the loan done that the other two before them couldn't get done, that breaks that door open. And now all of a sudden, you don't even know what's on the other side, but oftentimes it's something quite prolific. So if you don't have the knowledge, you're going to be afraid of somebody bringing a tough deal to you and you flubbing it. You're going to be afraid to talk to a CPA. You're going to be afraid to cross sell a financial planner, because
Yep.
you know that you don't know enough to hang in that conversation.
Hmm.
So, knowledge is critical. Becoming a student of your business right now is important, to say the least. Being properly scripted and knowing what the sell is, which is level two, system for selling. I had to learn. I don't know how long you've been around, Chris. You seem younger than me, so maybe you don't remember this, but back in the early 90s, when those rates were at 9 3/4 and those houses were red tagged, I had to take two steps back. And in this market, this is the market right now where you have to take two or three steps back and get some elevation above your business and look down on it from 50,000 feet and say, strategically, what's the sell right now? I started talking about 2-1 buy downs a little more than a year ago, and half my clients didn't even know what they were. And
Yeah.
I was sharing with them, the sell is going to be a 2-1 buy down. And I had to explain to them how it worked. Um, what is the sell? What is the need? Where do people have pain? And what is my presentation to display to them that I have something to offer them that would be valuable and cure that pain? So right now it's debt consolidation, and we can go into that in a little bit of depth in a minute if you'd like, because I can give you some very direct suggestions on how to go about that.
Yes.
The third level is marketing mastery. Okay, so you have to have marketing. Marketing gets you at bats.
Yep.
Your selling presentation is what dictates your batting average.
Hmm.
If
Yep.
you don't have a good essential knowledge and you don't have good selling skills, your ROI on your marketing is not going to be good, and you're going to quit because you're not going to be able to see the return. You're going to say, this doesn't work. Well, is it the marketing that doesn't work? Or is it your lack of knowledge in your system for selling yourself that's causing your marketing to not look like it works? So
Hmm.
those three, and then there's always a fourth one. There's always a fourth and a fifth one, actually. The two disciplines that are, in my mind, personal disciplines that are running parallel all the time, no matter what the market is time and task management
Hmm.
and mindset.
Yep.
So, and they do intertwine because so much, Chris, of time and task management is choice management.
Yep.
What am I saying yes to that is not a hell yes? And why am I saying yes to a hell no? And
Yep.
oftentimes it's fear.
Yep.
So let's go into that for a second. So right now, if you've been in this business for 5 years or more, you have a database. And that database is the most valuable asset you will ever have in your arsenal. Too many loan originators spend too much time and money chasing after new relationships when they have existing relationships that they've positively impacted right there in front of them. And that is what your database is.
Yep.
That's your annuity income. If
Hmm.
you are consistently bringing value to that group of people, there will always be deals that you will get every year, whether you realize it or not. We can't calculate them like a life insurance agent can, who says, I have a book of business that's going to have X amount of renewals annually, and I'm going to get paid on those renewals. It doesn't mean it doesn't exist. It just means that you can't rely on a specific number, but you kind of can, because if you're staying in touch with that database in an impactful way on an annualized basis, it is going to spawn naturally repeat customer business and referral business to the friends and family of those people. And I want everyone to think of their database as this. That's your outside sales force.
Oh, I love that.
And if you're not adding value and bringing and staying in front of your outside sales force, they're not going to sell for you. Now, why don't loan originators stay in touch with their past client database? Let's ask that question. They don't stay in touch with their past client database for a few reasons. One is because they don't have things to send that are of value.
Yep.
They don't know the system slash frequency of touch points. And probably most prolific is they're afraid. So this
Yep.
goes to the why am I saying yes to something that's a hell no? Or why am I not focused on the things that are tried and true and that are going to bring me business? Well, oftentimes it's because of fear. I haven't stayed in touch with them. I was slammed during the pandemic. I haven't talked to them over 3 years. Some of them probably refied with somebody else. These are all stories. They're all fear-based stories. They're afraid that if they call their database that the person's going to be angry with them, so they avoid it. And the more time that goes by, the more the fear increases,
Yep.
the more the shame and embarrassment is a part of the equation. And what I really want to say to everybody is enough.
Yeah.
They don't care that you haven't called them. They're not sitting there wondering when you're going to call. Just pick up the phone and say hello and ask them how they're doing. And
Yep.
if you need to, feel free to apologize. You simply say, it's been too long since I've called you. I don't want to apologize to you for that. I want to do a better job of staying in touch with you and making sure that I am in the know of any needs that you have, whether they be needs that I can fulfill for you or needs that someone else can fulfill for you, and I can make that introduction. and then start to engage in dialogue about what's going on in their life. You know, there are a lot of people right now, a lot. I mean, now that we're in, halfway through 23, chugging along, getting to 24 before too long, the pandemic is a long time ago now.
Yep.
Believe it or not, we're 3.5 years almost into this thing. So think about all the people who bought homes in 18 and 19 as an example, and you did their loan, and they've been in that home now for 5 years, going on six. They were locked up in that home for a couple of years. There are things about that home that they really wish were different. They wish they had that extra bedroom. They wish they had that swimming pool in the backyard. They wish they were in that school district. They wish that they had the home office because now they're working from home half the time. The house doesn't work for them, but they feel like they're locked in because, they're at 3.25% or 2 7/8 or whatever the rate may be. But that doesn't mean that they don't have a need. And that
Yep.
doesn't mean that you can't be the one that fills it. So I'm going to hit pause because I'm like, I could go on forever, bro. And I don't want to dominate here. I want to check in with you and make this interactive. What do you have to question or add to that?
No, it's just first off, you can keep going because it's a value train and you're just over delivering. But I will say this: in there's so much we have a service where we will call out to mortgage people's past customers. That's a
Okay.
huge part of what we do in our business. And
Okay.
we call realtors and financial planners and investment advisors, and we book those appointments. And what we have discovered in doing that is the number one problem that people have is they don't have an offer. And just like you said, they're scared to reach out to past clients, or they think if it's not me making the phone call, it's not valuable. And what we've discovered is that the offer doesn't matter so much. And the fact that them calling doesn't matter so much. What matters is the human connection of, do you have a need and can we help you? Can we support you? That actual reaching out, connecting with the customer, and them having the opportunity to have that conversation is so incredibly valuable. It is absolutely, I think, the number one most underutilized marketing tools that we have in the mortgage industry is just human connection with the people that we've already done business with. Now, I have heard you teach about a specific way to get listings in today's marketplace from your database. Would you mind kind of layering on where we are already right now and talk a little bit about that strategy?
Yeah, absolutely. I want to add to what you just said. They don't know what to say is a really profound statement that you just made. And the reason they don't know what to say is because their goal is the wrong goal.
Oh,
So if you go into the call with the goal of, I'm here to get a deal, then it makes it incredibly tough to know what to say when the person has 3.25 or 2 7/8 and you're at 6.5. But that's not the goal.
yeah.
The goal is to connect. The loan officer with the most friends wins.
Hmm.
The more friends you have, the rest will take care of itself. So what if the goal were not to get a deal? What if the goal were simply to connect? And from that connection, sometimes a deal will come because you're intelligent about the questions you ask. But it is a win. It is an absolute win if you have a 10-minute conversation with someone and nothing else happens,
Yep.
because they're going to remember you when they have a need that you could fulfill. And they're going to go with you because you stayed in touch with them and you incubated and nurtured the relationship. So take the pressure off yourself
Yeah.
as an originator. Don't feel like you don't gauge your success on how many of those calls resulted in a deal. Gauge your success on how many connections you had. That's
Yeah.
the new metrics in today's market. So listings. Okay. So let's talk about listings and debt consolidation, because
Okay.
those are the two opportunities right now that can come from making these calls. So start with listings. Simple question. How's your house? And
Hmm.
how do you feel about it? I mean, how's it serving you? Are you happy there? I mean, what's good about it? What do you wish were different about it if you could wave a wand over your house and change it in some way? Okay? And then let them talk. And
Yeah.
they're going to have plenty to say. I need new flooring. I need that swimming pool. I wish I had a guest house for my elderly parents so they could come live with me. I mean, guess what? These are all potential opportunities, okay, for you to be able to solve some of their challenges. I wish I was in a different school district. I wish I didn't have as long of a commute to work, whatever the case may be. Okay, cool. So, have you thought about listing your house for sale and moving to a new area that served those needs for you? Oh, well, I have, but look, I mean, it's all over the news. Inflation, rates are at 6.5. I've gone online and done that mortgage calculator thing, and my payment would go up by $1,200 a month. Yeah, I totally hear you. It's crazy how the media really pumps us with a lot of negative information. But here's one of the things, Chris, that I've found is that this information is misguided and oftentimes misleads people into thinking that there aren't opportunities for them that are actually available. I've actually done a few loans for people lately who have moved up into a more expensive home. Um, and the payment shock and differentiation was not as significant as they thought it was. So let's start here, Chris. If you could have that extra bedroom that you could convert into a home office and had the view that you wish you had of the open space because you and your wife like to go trail running, or you repeat back to the person the things that they shared with you that they wish they had if they had waved that, magic wand.
Yeah.
So you validate, you get them to dream a little bit, get them emotionally attached. People make decisions from two places, the financial end and the emotional end.
Yeah.
It's up to you to help them experience the emotional end in the way that you're having this conversation with them. That's why you want to ask an open-ended question. An open-ended question evokes, somebody elaborating and sharing some feelings. Okay, great. If you could have the house that had that, how much extra would be comfortable for you to pay on a monthly basis to have that house?
Yeah.
$1,000. Okay, so I realize, Chris, that $1,800 a month is more than you can afford in addition to what you're currently paying, and 1,000 is the max. Let me run some numbers for you because I think that what you're going to find is that the after-tax result of you having this increased mortgage indebtedness and this home that you really want that has X, Y, and Z, and you repeat back those things, is probably not as severe as you think. And you run the numbers for them, and let's say it's $1,400 more a month after tax.
Hmm.
So we're only off by $400. Okay, now let's take a look at any other indebtedness that you might currently have. Do you have any car payments? What's your current credit card debt situation? And I want to go off script here for a minute. This is the delicate part of the conversation.
Mhm.
This is the part of the conversation where you have to come from an empathic place
Yeah.
because people have shame around the fact that they've racked up $25,000 in credit card debt when they jailbroke from their house after the pandemic and went and did 4 vacations all over the world and went and bought a new used car that was more expensive than the new car, 2 years before, and all the things that are going on right now. They got a car payment. Maybe they have a HELOC that you didn't know about that they took out with their credit union. Maybe they have some credit card debt. So in that scenario, you could deploy a strategy that my good friend Eric Bible, who is a part of the L360 family, has been deploying. He's been having tremendous success with this, which is taking a look now, shifting the focus away from, see, they're fixated on 2 7/8 versus 6.5. They're
Yes.
fixated on $1,800 more a month in mortgage PI payment or
Yep.
PITI. But what they need to be fixated is overall cash flow. So let's look at your current PITI plus that car payment, plus your credit card, which is at 22% right now, plus your HELOC if you have one, which is at 9 3/4. And let's talk about what it would look like if you were to get the house that you wanted, so lifestyle now, and we were to take the proceeds from the wealth that you've accrued by laying on your couch over the last 3 years in your home, and we paid off all that stuff, got rid of all of it, took out a higher loan. Now let's look at the after-tax benefit. Now what you're going to find in many people's cases is that they're under that $1,000. Some people, I looked at a model with Eric a couple of weeks ago that he showed us. He actually reduced the person's indebtedness and got them, reduced the cash obligation, I should say, and got them the home that they wanted. So now you're having a conversation with the person about wrapping all of that into the new loan, making it tax deductible because it's a new purchase money loan, looking at the after-tax benefit associated with having wrapped all that in there and having the house that they wanted. And you continue to anchor back into their dream, the view of the open space, the home office, so you don't have to drive to work. Get them excited about it.
Yep.
If at that point, Chris, it still doesn't make sense, it's still uncomfortable, that's not where the conversation ends.
Hmm.
The next part of the conversation, which is the critical part of the conversation, is to use a term that I developed last November with my clients, which is strike rate.
Hmm.
Let's determine, Chris, the strike rate that we need to be at in order to have everything that you want, to have all those improvements, to have that new home in that new school district. What I've calculated, Chris, is we need to be at 5.75. We're 0.75% away from that right now. I'm
Huh.
going to watch this for you. And as rates start to come down, and they will, I don't know how long it's going to take. My guess is sometime later this year, maybe at the worst into early 24. I'm going to make you aware of that opportunity. And when it gets to 6 1/8, you pick up the phone and you call Chris, or you shoot him a text and you say, "Hey, Chris, guess what? We're at 6 1/8. We're getting closer, buddy."
Yep.
Okay. Then when it gets to 5 7/8, Chris, we're almost there. We're about 1/8 to 1/4% away. We should probably talk pretty soon because I think it's going to keep coming down. And oh, by the way, when it gets there, I'm going to introduce you to a real estate agent who's going to show you property in the neighborhood. I know somebody who's outstanding in that area. So you can start looking, and he or she will list your house for you for sale. So here's the deal, is that most originators, whether it be with refis or this move up buyer strategy that I'm articulating right now, most originators have their hands in their pocket. And when rates drop precipitously, they're scrambling. They're trying to figure
Yep.
out who to call. They can't make enough phone calls, and then they're playing phone tag with the people, and then they're having to run numbers, and they're doing their analysis for the people and all of these things. Do that now.
Yep.
What I want you to do is I want you to build up a war chest of people that are at different strike rates. I got 5 people at 6. I got 4 people at 5.75. I got 14 people at 5.5. I have 27 people at 5.25. So when you wake up and you see mortgage-backed securities rallying, you simply pull the report and you know the 5 people to call. And it's not having to resell them because you've already sold them and
Yep.
agreed that when we get to this rate, we are going to strike. Then it's a very direct hit the bullseye conversation. Chris, I got great news. We're where we wanted to be. I want to introduce you to Bill Jones with, Compass, who's going to give you a call. He's going to run a CMA on your current house. He's going to start to show you property in that area. And then it's ching, 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 ching. And that's what I mean by working smart and knowing your product and having a good presentation down. And this is your marketing, by the way. You're just marketing your current database. You happen to have a lot more data on them than you do the general public. So why
Yep.
not do it?
Yeah, I could not agree more. And I mean, it's such a powerful strategy because I talk to a fair number of people in the mortgage industry. One of the things that they're struggling with right now is control. It used to be there were so many deals coming in. The hardest part of it was processing it all. And now we've shifted into a market where sometimes they're just sitting in the office waiting for the phone to ring and they don't have that control over where am I going to get my next deal from. And this is absolutely attainable for every single person listening to this podcast. Pick up the phone, follow the steps. There's deals there. And I would only add one other thing. As you continue the relationship building, as you continue to provide value to people, because if they don't know and you're the one educating them on this, is tremendously valuable for people. Don't forget to ask people to leave you a 5-star rating and review on your Google profile. That then rolls into more consumer direct leads, which then you put into the exact same pipeline. Exactly what Tim's talking about. It's just another pathway to the consumer that you can leverage from your database.
And here's one thing that we've been talking about lately, and with all my clients in L360, and it's a brilliant strategy, which is, and this is another Eric Bible strategy, so I want to give him props for that, is think about all the realtors that you've done a deal with, say, in the last 48 months. There's a pretty long list. Let's say there's 50. And maybe they're not giving you business. Call those 50 realtors and do this presentation that I just articulated for them. Take 15 minutes and say, this is what I'm finding to be really successful right now in calling my past client database. And I have a whole bunch of different people that are various strike rates. So as
Hmm.
soon as the rate is there, we know that's our trigger to take action. Who have you worked with in the last 24 months that wanted to buy but didn't buy?
Yes.
That you'd like me to deliver this presentation to and to cultivate a strike rate with them, and then to get back to you with a report letting you know, okay, these 11 people that you gave me are ready at these various strike rates, and then I will stay in touch with them. Now, think about how many of those realtors worked with a loan originator other than you that is no longer in the business. And or even if they are still in the business, they're not doing what I just articulated. Realtors are in need of originators like us right now that can help them generate business.
Yep.
All they could say is no, but what we're finding is a lot of them will say, yeah, actually, I'd love for you to deliver this presentation to these 11 people and to reignite their interest for us and stay in touch with them for me and let me know when they're ready to go.
Man, incredibly valuable. That is just awesome. And I find, well, it's the same call reluctance. I've got a list of qualified realtors that I've pulled from MMI, and it's paralysis by analysis. So the phone is 10,000 pounds because they don't know what to say when the realtor picks up the phone on the other end. And that is just absolutely brilliant. It's valuable, it's timely, it's just fantastic. So
Thank you. Thank you.
that is amazing, Tim. What so I'm thinking about Eric specifically because every loan officer I find can get the same strategy and they'll go out and implement it 10 different ways if you give it to 10 different people.
Mhm.
And so I'm wondering what you're seeing in today's marketplace is one of those things where you're just seeing consistent results from your clients on things that they're enjoying implementing in today's market.
Well, I mean, there there are people that I know that are doing a really great job of filling a room or filling a Zoom call with realtors and educating them on what's happening in the market right now and educating them on some of the strategies that I've just articulated. Realtors are, when business is great, I mean, think about it, they're no different than us. I mean, when business is great, like we don't really pay all that much attention to market conditions because business is just flowing and we don't have the time. But as soon as business dries up for both us and them, they're hungry. They're
Yep.
hungry for ideas. It's your job to bring them the ideas. So I have a lot of clients that are doing really effective job, as I said, in doing lunch and learns and or Zoom educational scenarios and bringing an appraiser in to teach a room of realtors on a Zoom call or in a live format, what's happening in the marketplace right now. So that's one thing. Another thing, of course, as I said, is really diving deeply into your database. Um, Another thing, and this one isn't sexy at all, but it's super important, which is, you know, I know originators right now who are really taking the time to understand the products that are available out there.
Yeah.
I mean, that's a super important thing, and to understand how to sell that product. I mean, I'm going to date myself for a minute, but back in that 1994 era, the product that I learned how to sell, and it doesn't exist, I don't believe anymore. But boy, did I figure out how to sell this thing in a really compelling way. Was a negatively amortized adjustable rate mortgage that had the ability to have payment options associated with that monthly payment. That's an example of like looking at a product that nobody else was selling and figuring out how to sell it in a way that was compelling and actually was very attractive to consumers. You saw that with the 2-1 buy down. I think that, going forward, we're not there yet. When the yield curve normalizes, you're going to want to learn how to sell, hybrid arms again, 7-1s, 5-1s. I mean, I always referred to those as short-term fixed rate mortgages. I never
Hmm.
put the emphasis on the word adjustable.
Right.
Does it convert to an adjustable? Yes. Do I think that you'll ever convert to an adjustable? No, I don't, because my job is to manage your debt for you on an ongoing basis going forward. And I'm going to get you out of that loan before the 60th month or before the 84th month or before, in the case of a 10-year, the 120th month. So I put the focus on it's fixed. It's fixed for as long as we need it to be fixed, because I'm going to get you out of it due to the cyclical nature of rates. But learning how to, non-QM, bridge loans, there's a lot of products that the problem, Chris, with the market that we used to be in is it creates atrophy. I mean,
Yeah.
there's all you sold was 15 and 30 year for about 5 years there, so you kind of forget how to sell anything else, and you passed on the tough deals because you didn't have enough time in the day. So you said, I'd rather have my competitor spend a whole bunch of time working on that tough deal. Now, the tough deal is, as I said, the door that can be opened to a future relationship. Um, I mean, those are some things that come to mind right there. It's a different market right now. It's a very, very singular of focused market. It's about selling and marketing right now, period. But from a marketing perspective, I mean, what I'd be doing right now is I would be building a marketing strategy that I'm going to deploy the minute that rates are in the mid fives. And who am I going to go after? I'm going to go after everybody that has a loan with a credit union. I'm going to tell my title company, give me all the indebtedness or all the trust deeds that are out there in this county because those people took out 5-1 arms
Yeah.
mostly. You sold against them for a year. You lost business to them, for a year because they had that product and you didn't have an attractive, unless you had, say, Raymond James or some investor like that. I'd go after, give me everybody that has a trust deed in these new home developments, because guess what? The builder's lender is not incentivized to go out and refi those people. The builder's lender is incentivized to work on the new purchases. So there's going to be refi opportunities in those two segments of the market. And I'd be building the marketing strategy now. Once again, most originators wait until the rates drop and then they try to scramble to put something together. And these things take time.
Yep. Yeah, I could not agree more. Tim, that is so incredibly valuable. Thank you so much for sharing so much with us today.
Welcome.
Where do people go to find out about you? How do people connect? How do people get more information about the Leadership 360 coaching program? What's the best place to go to?
Thank you for asking. Just simply, our website is performance-experts.com. performance-experts.com. And then on the landing page of that website is information on all of our coaching programs, including Leadership 360. And then, my podcast is a good place to go too. I mean, I do 2 shows a month. It's a long form format. My shows are an hour and a half roughly in length. And I have some of the top producing originators in the country and some excellent best-selling authors as well on my show. So you're welcome to go to the 360 Experience, or on YouTube and Apple Podcasts and Spotify and all that stuff. Yeah.
Awesome. Well, to all of our listeners, thank you for listening. I think this is definitely worth a 5-star rating and review on iTunes. So make sure you hit us up on there. If you're watching this on social, make sure you hit the like and share button, because a rising tide lifts all ships, and this information helps everybody in the mortgage industry. So thank you for that. And Tim, thanks for being on the show.
Thanks so much, Chris, very much.